Hey everybody, Courtney Smith here with our August 31st Wall Street winners. Wow, summer's come to an end. Let's get going. This will never come to an end. Okay, a lot of things happening here under the surface. So here we have the S&P completely broken out above its previous highs, now in all-time high zone. Look at the purple predictor. Back in April, it was way below the price. We go to the beginning of May, it's way below the price. But then through May and early June, it goes up at a faster rate than the price does. Then the price comes down a bit, but the purple predictor goes sideways, and then they both take off. The purple predictor, though, makes new highs at the end of June, whereas the S&P is still not. Then the S&P and the purple predictor keep moving up, but the purple predictor moves up at a faster rate, showing that really starting really in May but accelerating at the end of June, the smart money has come in and bought the S&P. And we always want to go in the same direction as the smart money, because the smart money is usually the big money, and they're the ones that really, I don't want to say control, but they're the ones that dominate the market. Over here on the Dow Jones, look in the red box. First, the Dow Jones has yet to make new all-time highs, and notice that the green line, which is buying pressure, is going up. The red line is going down. So buying pressure going up, selling pressure going down. That's obviously a recipe for a bull market. But we're also getting kind of towards the high end of buying pressure potential. When we get up around 40, if you look back over the last year, every time we've gotten up to 40, with the exception of early June, buying pressure is reduced after that. In early June, we saw the buying pressure pop up to about 45. So we might be running out of gas on the upside as far as buying pressure is concerned. Let's take a look at selling pressure. Selling pressure hasn't been this low for the whole year. Once again, when things get to extremes like this, they don't stay there very long. So look for selling pressure to start to increase. The NASDAQ, apparently over the summer, Congress passed a law saying that the NASDAQ's never allowed to go down. It has to make a new all-time high every single week, apparently. So this is looking very, very good. Now, I mentioned that we've had... Anyway, let's just leave it at that. But just take a look down at the bottom. We do see volume going down as the market's going up. Now, we are in vacation season, so maybe we shouldn't look at it too closely. But this is pretty powerful price action here. But underneath the surface, it's not as bullish as it looks. Also, take a look at the green line. The green line is now above 80. You don't see the 80 on the scale. But nonetheless, that is, 70 is on the scale there. And we don't stay up there above 70 for very long either, usually. So once again, another reason for a little dip. A little dip or bear market? Well, every bear market starts with a little dip. So let's just keep watching. We are approaching the ideal time that I think we're going to see another bear move. But let's just keep going here. Seasonality is neutral for both the industrials and the utilities. Seasonality. Now, this was very interesting. So there's three lines on the chart. Let's take the one at the bottom. This is if there's an open field. That is to say, neither the Democrat nor the Republican are the president. Well, that's not the case. So we should ignore that one. If we take the blue line in the middle, that's all election years, whether there's an open field or a sitting president or whatever. That's kind of neutral this week. But if a sitting president is running, it's quite bullish. So this is one thing that's bullish. Now, most of the things I'm going to talk about are, let's call them mini bearish, not mega bearish, but mini bearish. But I found it quite interesting because it's quite rare where two of these lines go in exactly the opposite direction and in basically the same magnitude. But right now we have to assume that it's the sitting president, one, the green line. Now take a look right here. Let's take a look at this line. Let's break it down a little bit more. So the green line says that we should rally here through September. But October, as we go closer and closer to the election, people get in, who's going to win? Who's going to win? I think the consensus is that most people say this is going to be a tight election. A few people think that Biden's got a clear lead. He doesn't really, if you really break down the polls, they don't. He doesn't. But nonetheless, whatever you think right now, it'll most likely be pretty tight as we go through later September and October. And that's why the market tends to go sideways. But once we get to the election, then the market takes off again in a normal seasonal run. And the reason is simply this. The market doesn't go down in September and October like it does in the blue line and the red line, for the simple reason that most of the time the sitting president wins. There's only been 3 losses of a sitting president since 1900. That would be Herbert Hoover, George Bush, Jimmy Carter, and who's the third one? I think Bush the Senior. Bush the Senior, yeah, that's the third one. All 3 of them had a recession on their hands, and that's why they lost. Well, the interesting thing is we've got more than a recession going on right now. But at the same time, the polls are not blaming President Trump for the recession. But on the other hand, it's not a booming economy. It's not even a stable economy. So really, this is not if this was a recession caused by normal economic reasons, there's no way that Trump would win. But it's not caused by the president. It was caused technically by governors and localities. They're the ones that have the power to lock down the economy. The president does not. So it's hard to say. We know that the public are not blaming Trump for it, but it is here. So it's a very unusual situation. They don't blame him for it, but on the other hand, a lot of people, millions of people have lost their jobs. So there's other factors I think are going to have to come into play to determine who the president's going to be. So we might want to look at maybe the top one and the middle one, start to weight the middle one a little bit more. I'm still rejecting the bottom one because it's not an open field. Okay, a lot of very bullish things are happening here. First of all, the yield curve is getting more positive. That's positive to the market. Now, it hasn't gotten very positive in the last couple of weeks, but and so I'm not counting this as a major factor for the market, but at least it's going in the right direction. Positive yield curve equals positive stock market. Asset allocation, on the other hand, is skyrocketing here. We finally broke above the June highs, and we're going back to the January highs. So people are really taking their money out of the bond market. Why? Well, if I own a bond, what do I get for it? I heard somebody say the other day, I'll have to remember who it was, they said it's return-free risk rather than risk-free return. It's return-free risk, which I thought was pretty funny. So why would I own bonds? I might as well go buy a bunch of utility stocks or big cap industrial stocks that are yielding 3% rather than owning bonds which are yielding nothing, less than 1%. To hold a bond for 30 years, that's not risk-free return. That is return-free risk. So this is a big deal that's supporting the stock market. Also, they want to take more risk. They're getting a little bit riskier. They're saying we want more risk. We don't want conservative things. So they're not buying utilities and consumer staples. They're buying those sexy tech stocks. All right, EFA, yeah, this is doing well. Not as well as the U.S. market, so we want to stay focused there. Okay, bonds. You can see they're coming down hard, but look at the purple predictor showing that the smart money is really bailing out. So everybody's bailing out, but particularly the smart money are bailing out faster and buying tech stocks faster. But specifically, what tech stocks? Well, they're buying the big mega cap tech stocks. Okay, bond key factors, we've been highlighting this. They're all telling us that we should see higher interest rates. but the Fed was manipulating them. And I'm not sure. Maybe the Fed gave up on that. I'm not sure, because we had the dip, and now we're having a rally. If they were pegging it, it would be more stable. So maybe they've given up on the peg. But nonetheless, the pressure is on for higher interest rates for 10-year treasuries. Every indicator is telling us that. The dollar. Now, this one's really interesting to me. We got into this little trading range at the end of July. We then broke down out of that trading range, rallied up a little bit, but didn't make it back to the top of the old trading range. So right now we're in a trading range, but at a lower level. And we got down to the bottom of it on Friday. Obviously, the momentum is down, and we should see some type of continuation on the downside. Well, if the dollar breaks to the downside, then gold will break to the upside. So look for gold to be more bullish. And I am getting more bullish, and I'm starting to put in new trades on the long side. I'm not filled on them, but I'll buy on strength in the price of gold. And I'm picking the technically strongest gold and silver stocks that I can find. Gold key indicators have moved a bit more to the bullish side, particularly the bottom indicator has made a higher bottom here and barely made a higher high. So it's technically back in a bull market, which means basically, we could say all three are bullish, but, the top one is, let's call it neutral to bullish, but the bottom two are now becoming bullish. I put out a long-term outlook for gold video. This is a free video for everybody. Go over to YouTube and look for the Courtney Smith channel. Okay, you might have to put in Courtney Smith Trader to find it, but I just put that out on Wednesday, and I put out anyway. And then subscribe to our YouTube channel, because I put out a lot of cool commentary and education there. I think you're going to really enjoy it. Okay, crude oil creeping higher, nothing new here. Bitcoin, I said last week I was getting more bullish, and I would consider, but I don't have any orders in, to buy it if it breaks to new highs. So I'm just sitting back right now. Everything looks mildly bullish, not wildly bullish. So I'll just stand aside. But if I had to do anything, I'd rather be long than short. Okay, thanks, freebies. Fully paid up members. Hold on for just a second.